All right. Hello. Good afternoon to everybody. So glad to be here with you in our last session of this incredible day together. I am Courtney Powell, Chief Operating Officer and Managing Partner of 500 Global, a multi-stage global venture capital firm that's been investing in over 80 countries for the last decade. And for that reason, I'm very excited to introduce to you our two panelists, Sam Bankman-Fried, CEO and co-founder of FTX, the largest crypto trading exchange outside of China, and Alfred Chuang, the partner of Race Capital, founder of Race Capital, as well as the founder of BEA Systems. So thank you both for being here today.
All right.
And we are going to start first. Our session is going to be focused on how technology is going to impact the next decade and what can be done to make sure that it's a positive contribution to humanity. So with our theme of priority in mind, I will start with you, Alfred. What is your priority in technology and investing over the next decade?
Well, thanks, Courtney, and good afternoon, everyone. And I want to thank Richard and Your Excellency for inviting us to be at the conference. At Brace and between myself and my partners, we have two major priorities. Number one is about people. I mean, we're an early-stage venture fund. Investing in young people is extremely critical. I think we heard this morning, Princess Rima talked about, the young people are the architects of our future. And it really is true. It's our children, my own daughter, my own son, who can see this development is very critical. And they're shaping where we're going. Look at in 2019, our firm invested in Sam's company, and look at what it become, right? I mean, we can't be more proud. And this is continuing going to evolve. I believe that every single young person that we invest in is going to yield thousands of times the economic value. So hiring quality people is going to be a very critical thing. So we also heard, His Excellency Yasser talked about hiring critical people. So of the 29 million developers we have worldwide, 29 million, right? Over 20% in the US, and quickly followed by India and China. So we will have a chance as we shift technology to reload balance that. We're going to see emergence of a whole new group of people creating very high quality jobs. So our second priority is the one I'm extremely excited about technologically, which is I believe by 2030, we're going to see full Web3 implementation and the decentralization of the internet. Mm-hmm. So this is controversial, but I make it very clear. Seeing in the West, a third of our internet infrastructure running on Amazon Web Services, 30%, over 30%, it's just wrong, right? You can't have monopoly in the thing that we want to be the most open. I was one of those people that was in the table designing the internet in the 90s. We never thought it was going to be ended up in three monopolies' hands. So having the driving force and implementing a fully decentralized internet, allowing things like not having a single large centralized social site spreading misinformation. When I'm building an e-commerce application, I have choices, have highly energy efficient and reusable computing resources available, super critical. Yeah. So those are our big priorities.
Thank you, and we're going to come back to decentralization. Yeah. Sam, what's your biggest priority?
Yeah, so with my thank you for your kind words, and thanks for having me. With my day job, I think that the biggest things that I've been thinking about are basically, first of all, how do we get sensible regulatory frameworks to protect consumers and to allow innovation for digital assets. I was very pessimistic a year ago about this in the United States and globally. I'm a lot less pessimistic today. I think a lot of progress has been made. And I think that some of the trials and tribulations of the last year have actually just underscored for people how important it is to get something rolled out here on the regulatory side. So that's been one of the big priorities. And the other one on crypto is basically actually focusing on use cases, starting to build out ways that it can really make people's lives better. I think it can when it comes to money transfers, both domestically and internationally, remittances. When it comes to financial infrastructure, you would never have seen what happened when mobile workers had to shut off all retail trading if things had been using blockchain rails. And when it comes to social media. And then, outside of that, I think completely unrelated to crypto, getting prepared for the next pandemic today is, I think, something we should be focusing on much more than we are, because it might be much worse than the one that we just faced.
Yeah, no, great point. And diving a little bit deeper on the crypto side, I mean, we're in the room with a lot of decision makers, policy makers. What is critical for them to know?
So, I think that at its core, there's a lot of ways that we regulate traditional finance that work pretty well for crypto, as long as you're willing to make slight modifications. I think there are pretty analogous things between, what governance looks like on a company, what governance looks like for a token or a blockchain. You can have similar disclosure regimes for both. You just have to sort of identify the sort of technological differences and how to adapt to that. So I think the core broad framework is not that hard to get your head around from a regulatory perspective. It's really just kind of, actually getting it done, getting it implemented, making it reasonable, making it iterative. You don't have to have everything ready on day one, right? You can start with stablecoin regulation, with auditing the reserves of stablecoins. You can start, with whichever piece of it, is sort of easiest to chunk off, and just keep putting one step in front of the other there. And I think the thing you want to avoid, which is where I think some of the world is today, is where as much clarity as one can get is that regulation, that a license is required to offer a service, but also that there is no license that one could apply for it. And what you get then is sort of a combination of deadening innovation and at the same time forcing consumers to completely unregulated platforms, and it just serves sort of neither goal.
Yeah, and I'm curious actually, for both of you, having seen the development of the web over the last couple of decades and, the new breed that's happened with Web3, do you feel like there is a responsibility for CEOs to have to take on a different role? You mentioned your policy work, and maybe Web2 CEOs weren't as integrated into the regulatory framework. So for both of you, what do you feel like is important based on your learnings over the past couple of decades? And then to Sam, why it matters now?
Yeah. Well, I think one thing for sure, whether it's public or now private company CEOs, because I think that line's blurred these days because of the size of the private companies. I've always been told, when you hold those positions, people hold you in a higher regard, and you have responsibility. So doing the right thing is extraordinarily critical. Now, witnessing where the world has gone from fully centralized computer that we have no access, into distributed computing, web, now heading to decentralized computing, that means it's getting democratized. It's going to more people, but it needs coordination. It needs leadership, right? So you still need an exchange to get DeFi transactions through. So at the end of the day, if FTX doesn't work, I call Sam, right? So he's still responsible. So it doesn't mean democratization or decentralization mean there's no responsibility. And equally, just for one clarification, Web3 and all the things that are happening in crypto is not an island. So all of our Web2 technology will continue to live on. Actually, everything that we're building computing is still living on. Mainframe is still not dead. I tried to kill it for 20, 30 years, it's still around. So that means all of these CEOs along the way, along with their team, are now bearing a lot of the burden of doing the right thing. What's the right thing? So that's for humanity. It's just not for tech alone. But we just happen to be the people that are providing an infrastructure to run this stuff.
I think in an ideal world, there would be a really kind of seamless route for interfacing between stakeholders and policy, right? And you'd have sort of, constant, just, chill conversations between, regulators, policymakers, interest groups, public interest groups, right, industry, and not viewed as lobbying. That wouldn't be the aim of it. The aim is just information transfer. It's just, policymakers and regulators, they need to collect the relevant information. And that could be done in a way which, interfaced in sort of a seamless way with, with those stakeholders, and that would not require, I think, industry CEOs to spend a huge amount of their time engaging with the policy process. I don't think that's the world we're living in today. For what it's worth, I think we're living in a world where I do feel like it is incumbent upon me to go to DC, to go globally to regulators, and with my team and sometimes myself, talk about what's going on in the space, because I think if that doesn't happen, and there's not one person to blame here. I think there's been sort of a bilateral lack of communication historically, but I do think it's gotten quite a bit better over the last year.
No, that's really fascinating. And I'm also curious, I mean, all three of us have had the good fortune of being both founders and investors. And from an investor standpoint, what is it that we can do to support our portfolio companies and our investments to be a positive net contributor?
I'll just say briefly, as someone who has founded and has invested, investors more frequently do harm than good. By trying to intervene in the companies. And that's not to say you never should. There's a time and a place for it. But I think the biggest takeaway that I've had is you can't take a company with leadership with a particular type of DNA that is excited about a particular thing and get them to do something very different than that. It isn't going to work well. That's not who they are. That's not what they're going to do. Whether or not, ideally, that's what they'd focus on, it just isn't them. And at some point, you have to decide if you want to go all the way to saying there needs to be a management change here, or if you just want to say, look, I'm excited about them for who they are and want to support that vision.
You guys are founders and you've been founded. It's a terribly lonely job, right? There's not a whole lot of people you can go consult with and get support. I think the best thing for an investor to do first is to get out of the way. I know some investors love to mingle into the company's business. For sure, that's not what I believe in. When I was CEO, I didn't want anybody to mingle in my business. Right, we were able to get to a $58 billion market cap without our investors sitting on my lap, right? So I think the most important thing is support. Having that sounding board and be available, that's extremely rare to have. People talk about, I give this service, that service, help you to hire. Young people, they know how to figure this out. Just get out of the way, but give them support. A lot of it is going to be psychological support so they don't feel they're so lonely. They're facing the whole thing on their own. Because sometimes you can't go to the employee, they say, I'm weak. But everybody has weakness. So those are crucial things to do. Yeah.
Well, thank you for that. I think we all know how critical entrepreneurship is all over the world. And appreciate your time today. And thank you, everybody, for joining us.
Thank you.